Do you ever feel just a little overwhelmed when you're about to dive into a company's financial statements? The sheer volume is upsetting. And honestly, this one that I just went through is actually a little smaller than most. Well, in this video, I'm gonna walk you through step by step how to confidently navigate this intimidating cluster. All right, I said it in the last video and I'll say it again. It's good to be back. If this is your first time here, welcome. My name is Steven Spicer and it's my goal to help you invest smarter. So hit that subscribe button and the notification bell and join us on this journey. Now, after my last video, I heard you loud and clear that you appreciated the clips from the Empowered Stock Selector course. That's awesome. I'm excited to share, especially this one, about how to efficiently navigate this mess. I remember how I felt as a new investor. I knew I was supposed to review financial statements, but I didn't really know how. I didn't know where to start. I just tried to read them like a book. I didn't know what I was looking for. Does that sound familiar at all for you? Well, if any of that does, if any of that checks any boxes for you, if it sounds familiar, similar to how you feel when you're faced with this large stack of papers, this tome of financial statements, then I'm incredibly excited to share this with you, this step-by-step of exactly what I look at and when. So get ready to take some notes and use this the next time that you're sitting down for a leisurely financial statement review. Cue the clip. So now, at this point, that's when I recommend you give the company's financial reports a thorough rundown. Pull up and print off the company's most recent 10K, 10Q, conference call transcript, and you can find all of that on Seeking Alpha. Also, if you can find old shareholders' letters from previous annual reports, those can be useful here as well. Most lay investors are not doing this, even though they know that they should. In fact, I bet most professionals don't actually do this. But although it's intimidating at first, it doesn't have to be that hard. Here's what I recommend you do. Review the conference call to see what management is focusing on. Go through all the questions that are being asked by analysts and investors. This can give you some great insight into the concerns that others are seeing with this company and or industry in question that you too may want to have answered. Then pull out the most recent 10K. These can be overwhelming documents, sometimes hundreds of pages long. Just remember, the longer they are, the fewer people there are that have actually read them. So there's more opportunity for you to have an advantage, for you to understand something that others just don't yet. And remember, this is your money we're talking about. If you want to be successful long term, you need to give yourself every opportunity to succeed. And that may mean suffering through a lengthy 10K. Now, I print these documents out so that I can mark them up and retain as much information as possible. I recommend that you do the same. I also tend to have them up on my computer as well, just in case I want to Control F, the find feature on my computer, a certain term in this massive document. Ultimately, you're going to at least skim the entire thing, but you can start with some of the more important items. Again, if there are problems, let's find them as soon as possible so that we don't waste any more time. I recommend starting with item 1. Read the company's description of what it does. By now you know this. Just make sure that what it says aligns with what you're thinking and that you understand it and its industry. If you don't understand it at all, then you should not be investing here. If you have a question or two about it and you can't find the answer online, record it in the questions and concerns area on your workbook. We'll deal with that in the next part of this lesson. Then jump to items 6 and 7. Thoroughly review all the financials. Make sure the numbers you've been working with are indeed correct. Make sure the cash flow statement makes sense to you. For example, if most of the company's cash flow is coming from investing activities instead of operating activities, that may not be sustainable. Take special care to review and understand those numbers. Take special care to review and understand all of the footnotes to each of the financial statements. Next, examine the risk factors outlined by the company. Many of these will be generic, but some will be very specific to the company. Pay attention to those. Sometimes underlying management concerns will be discreetly manifest here, but not publicly. Think about it. That way, if something does happen, they can point to this line item and say, see, we were aware of it and we were trying to address it. Also, this is where the company will note if they generate a significant portion of their revenue from only one or two customers. Obviously, that would increase the risk involved with the company significantly. So pay attention to those type of company-specific risks. Next, look at the legal proceedings section. It's not uncommon for large companies to have several outstanding lawsuits against them. They're almost always downplayed publicly, but they're given more direct treatment here for a similar reason as I mentioned with the risks. Anything listed as potentially having a material impact should be examined thoroughly before investment. If the company has a properties section, that can be a great place for hidden assets for you to find that aren't really being considered in the market's current valuation of the company. This could be valuable for a sum of parts analysis or could come into play when considering the potential downside of the company. As in, the stock might drop below a certain point, but you know that this asset is there as well and will be worth enough to ultimately support a higher price. After you've been through all of those parts, at least skim everything else. Know what each paragraph is about. Then, if there's been a 10Q since that 10K, skim every paragraph of it as well, including, especially, the financials. Make note of any additional questions or concerns that you have as you read through everything. If relevant, I'd recommend recording the page and paragraph along with those concerns. Now, if you were able to dig up those old shareholder letters, not all companies produce these since they're not required, I recommend reading through the promises that were made each year. I'd even go back 10 years if you can find them and if the management is still the same. Now, annual reports and shareholders' letters are meant to paint the company in a good light, so you should always read them with a grain of salt. But if you get the opportunity to read them like this, they can be incredibly insightful. Does management have a history of living up to its promises? How should you feel about what they're currently promising today? All right, I know that was a lot. It was dry just talking through it. Ah man, if I had that when I were getting started, that would have saved me so much time to know how to work through all of this. I picked it up. That doesn't mean that you have to do it exactly like this, but now you have a starting point instead of just some general counsel of go read the financial statements. So what's the most important thing that you look for when you go through financial statements? Let us know in the comments. And if this is your first time here, don't forget to subscribe and click the bell to start investing smarter with us on the regular. And if you want to learn more about the Empowered Stock Selector course, go to investlikespicer.com. That'll cue you into what's going on right now. As I release this video, we're just launching and we'll be closing the cart in mid-December, and I honestly do not know when we'll launch again. And if you missed that window, you can just go to that site and jump on the wait list. So if you're interested at all, head on over there. If not, that's okay. It's not for everyone. It's going to be a tight-knit group of highly focused investors. So I'll still help you as much as I can over here. I sincerely wish you all the best. Take care.
3 hours, 41 minutes,